going to be is.
I don't know if. See, I already submitted it. Let's see.
That's okay. Should be able to take a look at it.
Sorry for the background noise.
Oh, that's okay. No. Hey,
I have to. I have this 2 units that I need to try to get before.
Yeah. No, what you do is so cool. Like I said, you get your hands on a 63 Ram. You could do some business.
I'm all about Priuses right now. Okay.
Priuses?
So, Priuses.
Yeah.
That is what I do, man. And everyone made fun of me, and no one's making fun of me now.
No, that's the way the world is going toward the electric cars.
Well, you know what? I've dabbled with Teslas, and they're pieces of junk. They're not what everyone thinks that they are.
You know, I just don't trust that guy, Elon Musk yet. I think we were talking a little bit, weren't we, about cash flow, just a little bit, and maybe that was the other clip, but we were talking about how don't trust a company who's showing profits while cash flow is terrible.
Yeah, and that's I know from personal experience that's not good.
Yeah, that Tesla's a good example of that. But you and I, we wish we bought the stock a couple of years ago. Anyway.
Oh, absolutely.
Yeah.
I'm not gonna lie. I pulled out everything not long ago when everything took a dip. I sold everything off before it dipped.
Oh, good.
I need to get back in. I didn't have much invested yet because honestly, Bob, I make more off cars.
Yeah, why not? No, you got it made.
In my opinion, and I make it really quick.
Yeah. No, that's a great business. I can answer your question here, by the way, very easily. Okay, cool. I just saw it. What they're asking for there is the account number from the chart of accounts.
So what the hell would I put, dude?
Okay. Well, they have to give you the chart of accounts, and I'm sure they did here somewhere. For example, cash is the assets always begin with 1, the liabilities begin with 2, equity 3, revenue 4, expenses 5. So let's see what you have here. They have to give you somewhere in this problem a chart of accounts that you can pick up.
Here, let me go to the previous.
Yeah, it'll be there.
Just kidding.
Okay, this is all part of one problem rolling together?
Not really.
Okay.
That's the thing. Well, maybe.
Okay, hold it right there. Hold on.
Okay.
Normally, it's just a link. You just click on it. Oh, man, you're asking a really good question here.
Sorry for my ADD. I had to click down. My bad.
Yeah, that's all right.
Wow, that's cheap. That's. Wow.
Okay.
Boy, this stimulus has really jacked up prices.
Cars and houses, yeah.
Oh my goodness, the housing market. I'm waiting for the foreclosures.
Oh, please, I hope you get one, but I hope it's the only one. We can't go through that again. Okay.
No,
let me take a look at this later, Anthony, okay?
Okay. Let's get to work.
Yeah, let's start.
Well, actually, it's actually more like you get to work and I shut up and listen.
All right. Okay. Now that was chapter 5 you were just looking at?
Yes, sir.
Okay, so you got off to a really good start, it looks like. Okay, here we go. Here is our.
Pretty much, I'm actually all done with chapter 5. I'm on chapter 6 now.
Okay, we'll go through chapter 5 because that's what we're scheduling today. And we'll go over chapter 6 on Thursday. And then you guys have a big test on Saturday. Covering,
yay.
It's a huge test. Now, I didn't put it together, but it's going to be on all 6 chapters. And Cornelius broken it up into 2 sessions if you've looked at it yet.
Yeah, I did see that.
Because you're going through the pain of the compressed course too. You're doing this in like 3 days compared to everybody else.
That I didn't know when I signed up for this class that I was getting the compressed version.
Yeah.
So
maybe it's better though, no? You get it all over with.
Honestly, I don't mind. I enjoy a challenge. I think you can
Yeah,
tell.
yeah,
And let's do this.
yeah, this is it. All right, here we go. Now we get into something tricky. Adjusting entries. And I saw what you did there briefly just now, and that looks pretty good, actually. Adjusting entries. All right, class, welcome to adjusting entries. Adjusting entries are done by every company in the world. They can only be done at month end, and they can only be done after you've printed out your trial balance, your unadjusted trial balance. These adjusting entries are mainly a search for unrecorded expenses, and they are what we call internal journal entries, in that they are not involving a second party. They're pretty much just within our company here. And let me just start to get to this, okay? End of period adjustments. At the end of the period, things occur that affect the business's financial condition. They're talking about equipment wearing out, prepaid insurance being used up, and employees working hours for which they've not been paid. These are things where we have to prepare what's called an adjusting journal entry. You have a piece of machinery and you're depreciating it at $10,000 a month. At the end of the month, that's when you write what we're going to call an adjusting journal entry, where you debit depreciation expense and credit accumulated depreciation. And we'll follow up on that. Remember the prepaid insurance? Prepaid insurance. In December, you spent $12,000 to buy an insurance policy for the next year. So the month you bought it, December, it's an asset. You haven't gotten the benefit of it yet. But as soon as January is done, you say to yourself, well, that's 1/12 of that insurance policy. Now I can write an entry to record the expense and reduce the prepaid asset down by $1,000. So you're going to do the depreciation, and you're going to do the prepaids. And we're going to talk about accruing entries. The best example I can give you, because you've all been out in the workforce, employees earning wages that have not yet been paid. You work for a company and you get paid every week, and payday is next week. You're not going to get paid till next week, but you worked the 26th through the 31st of the month. Therefore, those hours you worked means that that expense belongs in that month. The fact you're getting paid next month doesn't cut any ice. So that's an example of a journal entry, an adjusting journal entry. You have to record the wages that have not yet been paid but worked, and put them into a temporary payable account. Adjusting entries. Why do we do them? We want to hit the matching principle. We matching revenues and expenses. Okay. In order to do this properly, we do these adjusting entries. Now, theoretically, you can do these every day and maybe not have to do an adjusting entry at one thing, but that would be stupid. Or you, like with the supplies, you buy $1,000 worth of supplies, and at the end of the month, you go out and count what's still there, and now you know how much you used. Are you going to write an entry 30 days every day for the month for, Anthony here took 10 pencils out? No, you wait to the end of the month and do it en masse, as we say. Revenue recognition principle. Man, we've been over this a lot, huh? Revenues are recognized when they're earned, regardless of when the cash changes hands. It can be the same as the cash changing hands. That's just a cash sale. Revenues are considered earned when a service is provided or product is sold. You did some consulting for me, and you handed me a bill, and I'm going to pay you in 2 months. That's our deal. But you did the work this month, March. That has to be recorded as possibly an adjusting journal entry. Same thing with expenses. Expenses are recognized when they're incurred. Salaries and wages is an expense, but here's another example. The month ends and you're looking at the trial balance and you say, oh my goodness, we have zero electricity expense. Well, we know we use electricity, And we can't wait 25 days or 30 days for the electric bill. So we have to come up with a number now and use that as the expense for the month. And we have to do it in what's called a systematic and rational basis. That's the accounting principal term, if you will. So in Southern California, coastal coastal California here, it's not that tough. We don't have big seasonal changes. Well, the bill in January was 100. The bill in February was 106. The bill in March was 103. We'll accrue 110. Just something reasonable, defendable. It can't be some crazy number that you want to make up to use to your advantage. Again, with the matching principle, can't emphasize this a month. It's the matching of revenues and expenses. And Anthony, I guarantee that'll be on the test in a couple of forms. You're going to get a question, what do we match? And the answer is you match revenues and expenses. It's easy to get caught in the weeds. They're going to give you stuff like the accounting equation, or they'll say liabilities and assets. It's revenues and expenses. To follow all three principles means that we got to bring the accounts up to date before we can do any financial statements. A fiscal year, we know what a fiscal year is. It's any 12-month period that a company chooses to begin and end its financial year. Fiscal year means the financial year. It doesn't have to be the same as a calendar year. And many businesses schedule their fiscal year to end when business is slow. And I never really thought about that much, but that's true. Nordstrom's, big high ticket department stores, their closings are typically in February. And two reasons: business is a little bit slower then. It's easier to count in inventory, perhaps, if you need to do it. And you want to make sure you scoop up all those December sales toward the end. Other businesses, like General Mills, Kellogg's, the cereal companies, their fiscal year goes back to 100 years ago when they actually grew the crops themselves, and the fiscal year was the planting season. It began in, I mean, I'm not much of a farmer. I don't know when you plant, and I don't know, you plant in September and then you harvest 12 months later. Let's look at these adjusting entries now. We're going to go through some examples of some of the adjusting entries. And this should look familiar, Anthony, as we were talking about recently, huh?
Yes.
You purchased supplies for $80. Supplies is an asset. It should be called prepaid supplies, but we know now in our class, supplies is the asset, supplies expense is the expense. So you debited this to supplies and you credited accounts payable or cash. We don't care. Now, what they're telling us in a way here is we now come to the end of the month and we want to know how much of this asset did we consume? How many supplies do we actually use? So Anthony, you sent me out to the warehouse and said, count the supplies, Bob. I come back and I say there are $20 back there. How many do we have on the books now? 80. That means we used 60. Okay, not too hard. Not too hard. Don't get confused on the test, because sometimes they tell you that 60 is how much they used, and they're going to ask you, and they're going to confuse you between the ending balance and the usage. Just read the question carefully. Okay. So you have a prepaid asset like supplies. The month ends, we found out that we used $60 worth of this stuff. Adjusting entry number one. We have to recognize the expense for 60 and credit the supplies account, the asset, for 60. So now this account here only has $20 left in it. That's an example of your prepaids. Prepaids are not too tough. You just have to understand that the prepaid is going to be a debit to an expense, and the credit will be whatever asset that was to begin with. If it was prepaid insurance, it'll be insurance expense. Prepaid taxes, tax expense. So don't make it any harder than it needs to be. And let's take a look here. And you can read Anthony, you can read these?
Yes.
If you can read them, the rest of you guys can read them. Tough luck. So here we go. We started off with a balance of 80 in the asset, and now we've credited 60. So that means going into the next month, we have $20 worth of supplies remaining, and we're recognizing the expense of 60. Here is your adjusting journal entry. Debit supplies expense, credit supplies the asset. Nearly all of your adjusting journal entries are a search for unrecorded expenses. Nearly all of them. You keep that in mind, that might help a great deal. Well, I know I'm most likely you get a debit and expense because we've not recorded it. Now, here's a better example of the world of prepaids, because they use the word prepaid insurance. Prepaid, just like prepaid supplies. So during June, this guy bought an insurance policy for $700. He bought it at the beginning of June, okay? So here it is. He bought a $200 policy. Do you notice there's two different numbers there, Anthony?
Yes.
Let's
So that
go
means
with the
there's a $500 difference in
yeah,
between.
the 700s. This should say 700. That debit there, that debit.
Well, isn't that trial balance?
What's that?
It says TB, so I'm assuming trial balance. So I'm assuming that the math was done.
Yes, exactly right. I'm glad you raised that point. I should have pointed it out. Yes, that's where you're getting these numbers from, your preliminary trial balance. And then you look at this thing here and you realize you haven't used any insurance. Well, you know you had insurance. So he paid $700 for a 10-month policy beginning on June 1st. So in the month of June, which is what I believe we're doing here, we have to record insurance expense of $70, right? It was a 10-month policy. 10-month policy, they paid $700 for it, $70 a month. Look at your entry here. We debit insurance expense and we credit prepaid insurance. We have now put the proper expense into June, and we are now left with the proper balance of this prepaid asset, which is going to be decreased $70 a month. We're going to write this entry here. We're going to write this journal entry here 10 times, once at the end of the next 10 or 9 months after this. Okay.
All right.
You're okay so far, Anthony, with the prepaids?
Yes, sir.
Not too bad. All right, here we go. Now, here's the one all you guys out there in television land should understand intuitively. You work for a company, but you don't get paid until next week. When you go into a job interview and they offer you the job, you're going to fill out some forms, and one of them is going to be an acknowledgement that you're willing to wait for your paycheck the next week. You know, theoretically, if you work today, they owe you that money. If you quit, they got to pay you. If you get laid off, they have to pay you. But if you say to the boss, well, I'm going to come work for you, but I don't want that policy. I want to get paid immediately on Friday. Well, you no longer have that job offer. That's all there is to it, right? So here we go. On the trial balance, we had $650 worth of expense there. Okay. And I tell you, someone's got to clean. I better watch what I say. I'm going to take it upon myself to go through these slides and fix them. Again, I've never made up a slide in my life, but this number, it looks like it should be 1650 based on here. Rohan paid his employees 1650. He debited salaries expense and he credited cash or whatever. But on the 28th, 29th, and 30th, his people worked an extra 10 hours at $40 an hour, $400, right? They're not going to get paid till July 7th, maybe. That $400 belongs here in June. So we are going to write a journal entry to debit wages expense and credit wages payable. And again, that wages payable should say accrued wages payable, but wages
Hey, Bob?
payable is okay.
Hey, Bob.
Yeah.
So what I've been doing is my mom was a math teacher, or is, and
Say that
growing
again,
up,
please.
my mom was a math teacher.
Ah,
Okay, so not that I learned all this, but one term that stood out in for me when doing these journal entries with trial balances, debits and credits,
yeah.
whatever you do to the left, you do to the right.
There you go. It has that certain
Honestly, there's
algebraic.
times. What'd you say?
It does have a certain algebraic quality to it, the trial balance.
Just a little bit. Just a little
Exactly.
bit.
I remember the nuns trying to pound it into my skull in algebra class, but I wasn't too bad in algebra. I didn't do much beyond that. But yeah, that's a good point. And that's the whole idea with the debits and credits. Like you're pointing out, you have to have a debit, you have to have a credit, one of each at a minimum. And again, we've got a third expense going, huh? We now have a balance of 1650. That was the salaries through the 27th of the month, which they already paid. Now we have people who work the last few days of the month. They're not going to get paid till July, but that $400 expense belongs in the month of June. So we debit that expense and we credit accrued wages payable. And look at the total now in your wages expense. We now have $2,050, which is the exact amount of hours worked times their hourly rate. Okay. You good on that one, Anthony?
Yeah.
Yeah, this one is kind of intuitive. Okay, here we go. Let's talk a few things here. The historical cost principle. Historical. What this simply means is everything on your balance sheet, all your assets are recorded at the actual cost. This cost remains on the books as long as the business owns the asset. No adjustments are made for changes in the market value of the asset. What we're saying here, everybody, is you bought a piece, your company bought a piece of land in 1950. You bought 10 acres on the beach here, down by Montecito, and you paid at that time $100,000. So in 1950, this company debited land, 100,000 and credited cash, say. Now it's what, 70 years later? That land is worth $20 million today. It's still going to be 100,000 on your financial statements. Anthony, when do you record the profit on that land? Do you have any idea?
I didn't actually English. When do you what?
We just said that $100,000 land today's worth $20 million, but you can't recognize a profit until you do what?
You sell it.
Sell it. Exactly right. Exactly right. So your assets that you see on the balance sheet often have no relation to the market value. And that's something we need to understand, huh?
Yes, sir.
What they're leading up to here is, Anthony, we're getting to the point where they're going to show us the depreciation adjusting entry. We buy an asset and we must assign to it what's called a useful life. That's the period of time that asset is expected to work. It's an estimate. It has to be a reasonable estimate. We can't go out now and buy a 1963 Rambler for our business and then give it a useful life of 40 years. It's just not going to happen. It has to be something reasonable. And there are guidelines from the IRS. An asset's useful life, as the life expires, there'll be, because of wear and tear, and it no longer works properly, expense should be recorded and the value of the asset should be reduced over the useful life, okay? And that's going to be done with a journal entry to debit depreciation expense and credit accumulated depreciation. Accumulated depreciation is another one of these pesky contra asset accounts. It's an asset, but it carries a normal credit balance. And any contra account, any contra asset is married to another account. In this case, the accumulated depreciation for, say, a building is married to the building. You will never credit that building. You're not going to credit that building or debit it. It remains at the historical cost. What does go down is the net book value, which is the original cost of the asset minus the accumulated depreciation. And here we're just working with straight line depreciation, okay? Straight line depreciation. You bought an asset for $10,000 and that asset is going to last 5 years. That's $2,000 a year in depreciation. Every year you're going to debit depreciation expense, credit accumulated depreciation. There is no exception to that journal entry. Let's understand. Here you go, Anthony's right up your alley. Salvage value. By the way, I'm going to digress. Class, hold on. I need to speak to Anthony one-on-one. Remember that Cougar I told you I had for 20 years? I had to get rid of it to buy an SUV because I had people coming out here. I got a letter about 2 months later, Anthony, believe it or not, informing me that that car was totaled in an accident up in Salinas, California.
Wow.
Why would the state contact me like that?
They never registered the vehicle.
Is that right, huh? Yeah. Interesting. Oh, well, that might, okay. I never understood that. I mean, I was sad to hear about it. I hope nobody was hurt.
I do. So I'm a licensed auto dealer in California. So we have a different system of registering vehicles and how to find out. Yeah. And my private vehicles that I do buy privately, that will usually happen actually quite often.
Really? That is so interesting. All right.
I've gotten lots of stacks of tickets from people.
I never heard that before. I'm glad you straightened that out. Well, we know what salvage value is. It's called scrap value, residual value. You buy an asset for $10,000 and you say to yourself, let's make it $10,500. We bought an asset for $10,500. And we think after this asset is completely depreciated, somebody will come in and pick up this car. You know, you would come in, maybe Anthony, and take it off our hands for $500. It's just an estimate, but it has an important consideration. You do not depreciate the salvage value. So that item we bought for $10,500, we're going to use $10,000 as the depreciable base. We're going to debit $10,500, debit the car and credit cash, but we're only going to depreciate $10,000 of it. The net book value can never be below the salvage value. So let's see what we have here. Mitch bought those motor scooters. Original cost is $4,800. And he's estimating a life of 5 years, which sounds reasonable to me. And because the salvage value is zero, we don't have to worry about it. The whole $4,800 has to be spread over 5 years or 60 months, right? So we're going to take 4,800 divided by 60, and I believe that comes to $80 a month, right? $80 a month. So for the next 60 months, at the end of the month, you're going to come in and you're going to debit depreciation expense for 80, and you're going to credit accumulated depreciation. They don't show a journal entry yet. I like them to show the journal entry. Book value. This is what we're kind of just talking about. Book value. It's the difference between the original cost of the asset less the accumulated depreciation. You can also call it the undepreciated portion. And again, if we have a car and we have and the market value of that car is a lot higher than we paid for it, we don't care. Everything is kept at the historical price. Book value, a very important term. The original cost of the asset minus the accumulated depreciation. At the end of the asset's life, the book value will be either zero or the salvage value, because you can never depreciate below the salvage value. Let's talk about that accumulated depreciation account a little more. We call it a contra account, meaning opposite, from the Spanish word meaning contra, opposite. It has a credit balance, which is why it's a contra. It's why it's an outlier. This amount, this account and the amount in it is going to be deducted from the related asset account. So here is our journal entry. All depreciation expense entries are the same exact thing. They are all a debit. They are all a debit to depreciation expense and a credit to accumulated depreciation. There is no exception to that. I'm always telling students, this is the one you pray they put on the test, because it's always a debit to depreciation expense, credit to accumulated depreciation. The prepaid's a little harder because you got different accounts to work with and you got to read the problem. So let's see what we have here. We debited the expense for $80. We had no expense there. We debited it for $80. And since you never credit the delivery equipment, you are never going to credit the delivery equipment unless you sell it. That 4,800 is going to stay there forever. So 4,800 offset by the contra account, its wife, means that the net book value is now 4,720. And it's going to go down. The net book value is going to go down by $80 for the next 59 months after this. And here, I guess they're just showing you a couple of accounts we haven't talked about too much. Accumulated depreciation, okay? And Anthony, here, they're showing this chart of accounts here.
About that.
This might be,
we're talking about, right?
Yeah, I mean, I can also talk to Mahendra, but I think just look in your book, maybe inside the cover or something, they'll have a chart of accounts that they have to give it to you. I mean,
okay.
But I'll just point out here to everybody, your chart of accounts, as you should know, begins with assets, and they begin with 1, liabilities begin with 2, equity 3, revenues 4, expenses 5. You can do it any way you want. If you want to be a wise guy, you could start with 5 and then go to 2, or it doesn't make any difference. But one thing I'll point out, notice that they have this contra account with the .1 on it. That's a pretty good idea, huh? That's telling you that 185, the equipment, the original cost, is netted against the accumulated depreciation for it. Wages payable just popped up. We're always going to have wages payable at the end of the month. And here we talked about the prepaid assets, prepaid supplies, prepaid insurance, and then we have the wages payable and the offsetting expenses here. So let's see what we have after this. Now we post them to the ledger. We post them to the ledger. Here we go. Oh, geez, got ahead of myself. Supplies expense. Well, by definition, you have no supplies expense on your preliminary trial balance. You don't know what the expense is until the end of the month. And we counted $60 worth of stuff. So we're going to debit supplies expense. And what account are we going to credit, Anthony? You want to take a guess on that one?
I was actually bidding.
Oh, okay. No, I think you know what it is. The prepaid supplies.
Oh, then you would deduct the amount used.
Exactly. Yeah. Yeah. We're going to debit the expense and credit.
Used, right? If I'm correct, it was 80. This is the $60 we're adjusting, which would leave us a $20 balance of supplies.
Exactly right. Exactly right. And again, I'm seeing an account number up here, 523. But we'll figure that out.
You know what? I'm not too butthurt about that. I think it was like an 11% subtraction for me skipping that one.
Oh, okay. Yeah, that's not bad. Plus, I'm not going to knock you down for that, because you're not the only one who's going to run into that. You're just the first person to point it out. And I'm going to be looking at those problems, and I'm not going to knock you. Get your 11% back, believe me. I do a lot of stepping on the scoring that comes out of the system. Very rarely do I take points away from anybody. but I'm always looking to bump. So here we go. What they're doing here, guys, is they're just showing us on the general ledger. Here is our general journal. We debit supplies expense and we credit the asset. And here is just a neater look at the general ledger. What did we do? Here's the account, supplies. We had a balance from the trial balance to begin with at $80. We credited 60, the balance is 20. Here we start with 0, which by definition is the balance of all these prepaid offset expenses. We debit, and now we have a balance there. And we do the same thing with the insurance. We had that $4,800 insurance policy divided by 60. It came, or I'm sorry, this is the, whatchamacallit, this is the insurance expense. We paid $700 for, and we're expensing it at $70 per period. Okay. You notice another mismatch here, Anthony? Look at this, 70 and 700. So oh, these slides.
Now you got to start finding the boo-boo.
Yeah. Well, this could be a good excuse if you find something like this on the test. You know. All right, let's see what we got here.
I like that.
And they're just showing you the rest of them here with wages payable. And I want to just emphasize this briefly, if I may. Wages payable, $400, right? And here we go. Wages expense, $400. That brings the total payroll expense for the month to $2,050. And it means that we owe $400 at the end of the month. That $400 is the expense we want to record, because that's where it belongs. And that $400 is a legitimate liability. We do owe the money as of the end of the month. Our employees are just nice people, and they say, I'll let you, give you a chance to do the payroll. But if this employee came in that day and said, I quit, I want my money, yeah, we'd probably have to give it to him. In fact, I know we'd have to give them to him that day. And this is the one I did want to emphasize here. Got the happy fingers today. Okay. There we go. Push it around like that. Look at your journal entry. Depreciation expense, delivery equipment, accumulated depreciation, delivery equipment. One is an asset, contra asset, and one is an expense. So now we had an asset for which we paid $4,800 and we've depreciated it $80. So the net book value, which is what we paid for the asset, $4,800 minus this $80, will give us a net book value of $4,720, and that's how it will be presented on your balance sheet. The worksheet, huh? The worksheet. We did some stuff with the worksheet before this chapter, right, Anthony? Or is this the first time they introduced the worksheet?
I think that's the first time they introduced the worksheet, because I read chapter 5 and it was towards the middle, towards the end.
Yeah. Okay.
And I don't remember reading that elsewhere, but.
Okay. Well, here we go, guys. Then say hello to what we call the worksheet. It's a 10-column worksheet. Oh, 10 columns, huh? What we're going to do, though, is use that 10-column worksheet to divide and conquer. Once we complete this worksheet, which is nothing but a piece of scrap paper, really, it's going to enable us to prepare the financial statements. And what we're going to do is we're going to come up with a worksheet. The first 2 columns are going to be the chart of accounts, the trial balance. The next 2 columns will be the debit and credit balances of the trial balance. 2 columns after that, we put the adjustments in. We enter the adjusting entries, and we're going to come up with a new adjusted trial balance. It's not a financial statement. This is just a worksheet. No investor is going to say, okay, I saw your income statement, your cash flow statement. I've run all my metrics. Now I want to see the worksheet you used. No one's going to want to see this. You can throw it away when you're done. And typically now you can do it in Excel very easily. It's not a formal statement, and only the accounting people use the worksheet. And typically a 10-column thing. I don't think we're going to go near 10 columns just yet. So these are the 5 basic steps. Prepare the trial balance. That's columns 1 and 2. prepare the adjustments. That represents columns 3 and 4. Then you take that trial balance and you add or subtract the adjustments as needed. Come up with the adjusted trial balance, columns 5 and 6. And then columns 7 and 8 is the income statement. And the balance sheet would be 9 and 10. And then you just have to do a little completion right at the very end, preparing the worksheet. And they're telling you put the name of the company on top. I don't know why they're telling us all this since it's not going out to the public. But you get the trial balance done. So we're going to use the same trial balance from chapter 3 just to get us going. Prepare the trial balance. Man, they're making a big fuss over this header for the trial balance, okay? Write the heading, double rule. Let's not worry about the underlining. So the first thing, prepare the trial balance, record the adjustments. Record the adjustments. So let me zoom in here because I don't think anybody can read that stuff. Okay, I think that's legible, right? And you can read that, Anthony, right?
That's way better.
Here we go. Okay. So let's see what we have here. We have our trial balance worksheet. Well, the month ended and we went to our general ledger where we did all those journal entries. You remember in chapter 3, we put in journal entry number 1 and we debited cash and we debited cash and we credited this, we debited that. And at the end of the month, these were the balances. And we prepared a trial balance. And the only thing the trial balance does is verify that the debits equal the credits. That's all it does. Now, we know by definition that this trial balance is not complete. It's incorrect. We have to adjust it. So I'm going to go over the 4 entries just briefly here. You're going to go to that first journal entry. Let's see, we'll do it. Where's A? $60. Remember, we had a $60. We counted the supplies. It was only $20. We had 60 left. We used 60. We debit $60. Here, we credit the asset $60. B, the insurance. That was that 10-month insurance policy. $70 a month. We debit insurance expense and we credit the asset, prepaid insurance. $400. This is the work you did the last few days of the month, right? You debit wages expense and you credit accrued wages payable. And then the easy one, and I say it's easy because it's always the same debit and credit. You debit depreciation expense for the wear and tear on that $4,800 motor scooter we bought, divided by 60 months, and we credit. And all we're going to do after this is move the new numbers over here. And let's just do it real quickly before we go to the next page. Cash and accounts receivable. You're never going to adjust them. Cash is not like supplies. I'm not going to send you out to the safe, Anthony, and count the money. And you come back and say, well, we only have $400 here. Okay, we'll adjust the cash. Cash and certain things need to be to the penny. So we would just bring the 470 to 31. Here we had $80 debit. A $60 credit means we have a balance of 20. A $700 debit minus 70 means there's 630 left in that prepaid asset. Now we're going to the next 2 columns. Prepare the adjusted trial balance. And I kind of just showed you a little bit about that. Extend those debits and credits that are not adjusted directly to the worksheet. No adjustment, you just copy them over. Enter the adjusted balance in the appropriate column, meaning debit or credit. If account has a debit and a credit, obviously you have to account for that. And then they're talking about how you put how the ruling is done. Good Lord. You need the
Hubble. I know, I'm leaning into my screen.
When I see you guys doing that, I know nobody can see it. Okay, now it's clear as a bell, huh? So let's take a look here. Look at the cash and the receivables. You're never going to have any adjustments on that. So you just bring the number over. Take a look at the next 2. Supplies, yeah, we had to adjust that down by 60, and we had to recognize $70 worth of insurance expense. So now the supplies balance has gone from 80 to 20, prepaid insurance from 700 to 630. Delivery equipment, we said we would never ever touch that. You just bring it over. Now this is interesting. They did say, I guess, in the problem that they bought this truck, these motor scooters in June. That's why you have no balance in accumulated depreciation. Now, after 1 month, we had 0. Now the balance of accumulated depreciation is 80. Next month, you're going to see that go to 160. It's going to grow $80 a month for 60 months. Accounts payable, you would never adjust. Wages payable, by definition, I use that expression again, you have no payables at the beginning of the month, but you recognize those last 4 days worked. Capital, drawing, typically you're not going to have anything on top of that. And then remember the Bob line. I'll tell you about a line. After drawing, everything below it is your income statement. After drawing, everything below it is your income statement. Everything above delivery fees, starting with drawing, that's your balance sheet. So what have we done here? We have come up with an adjusted trial balance. And hopefully we add these numbers down and they equal. And they do. We've done the hard part. We've done the hard part. Now it's just a matter of putting these numbers into the correct statement, either into the income statement or the balance sheet. So let's take a look at that. Here we go. Extend the balances to the income statement. That would be columns 7 and 8. And the balance sheet, that would be columns 9 and 10. Extend all the revenue accounts, the expenses, etc. Let's take a peek here. Good Lord, look at this slide. Complete the worksheet, rule, calculate the difference. Okay. To me, they're going too far ahead here. Let's hope they present this here. This is what I want to show you first. Take a peek here. We don't need the balance sheet yet. Remember what I said, everything after drawing, everything starting with your first revenue account, there's your income statement. There's your income statement. So this company had $8,000 of revenues, and it looks like they had 3,000. Remember these numbers? They were using the same statements we did in the prior chapters. Total expenses are $3,360. We're at a balance here on the income statement. We want to be at a balance at this point. We want to see more credits than debits, okay? So that difference is a profit of $46.40. We're going to add it to the debit side just to balance it out, okay? Look at your balance sheet now. We're bringing all of these numbers over, not from here. It's a very easy mistake to say, oh, I'm going to take them all from here. No, these numbers are krishklats. We don't use them anymore. We're going to take them from the trial balance that's been adjusted. So you bring the numbers over in the appropriate place. And guess what? On the bottom here, you notice that we're also at a balance by exactly the same number. That's a good thing.
All right,
Okay.
So to get this clear, you do your expenses, add the difference between the drawing and the expenses, which gives you $46.40, and then that balances both the left and the right.
Right. That's how you know you've done the 10 columns correctly, at least mathematically. Yeah.
Okay.
Yeah. So now what do we have here? Here is our income statement, and all the stuff above it is the balance sheet, with one exception that we're going to talk about. And that one exception is the capital. The capital is going to be increased by the profit of 4640. And it's going to be reduced by the drawing of whatever that number was, 400 or Where's the drawing? Drawing. Oh, wow, he drew 3,000. Okay. So let's get to that. I'm just going back a slide here. Let's look at this. Complete the worksheet. Bring it over to the income statement, bring over to the balance sheet. And then like we were just demonstrating, Anthony, we just take the net income and we add it to the income statement, do the same thing with the balance sheet. Any difference, we're just going to know, we know it's the profit. Any difference in the income columns would be the profit. And we're going to have to account for it both on the income statement and balance sheet. I'm not going to go into describe methods for finding errors other than some of this is common sense, okay? Check the addition, check. Journalize adjusting entries from the worksheet. Now, you all realize, everybody, right, that when you put those adjusting journal numbers into this worksheet, you have to make sure you also do it in the general ledger, right? So they're just going to give a little demonstration here. The worksheet helps the accountants organize the end of the period information, including the adjusting entries. But the accounts are not adjusted until you write a journal entry and post it. Make that a little bigger. So let's see what we're talking about here. Okay, here we go. They're bringing us back to the first four columns. These are your journal entries. Here are your debits and credits. And just make sure that you put them into the general ledger via a journal entry. Okay, that makes sense, right, Anthony?
Yes.
It doesn't do you any good to just put it on the worksheet if you don't put it into the records. See what it says here? Explain the cash, modified cash, and accrual basis of accounting. We're not even going to talk about it. The only thing I'm going to say about cash basis, modified cash, if you run a business on a cash basis, you're going to cash basis yourself out of business before you know it. It's not GAAP. It gives you financial statements that make no sense at all. Nobody's going to loan you money. No one's going to invest in your business. No one's going to sell to you, probably. We only teach what the world uses, and that's the accrual basis of accounting. Real quick, just to tell you a little bit about cash accounting. Revenues and expenses are recognized when the cash changes, when the cash pops up. And you can see how wrong that would be. Here's an example. In March, you sold $10,000 worth of goods to somebody, right? Under cash accounting, you're going to show that as income only when the guy pays you 2 months later. So therefore, sale for March is going to end up in May. And I don't want to go into any more detail than that. I can if you guys like, but here's what we're doing. Accrual accounting simply means you're matching revenues and expenses, huh? Offers the best matching, the best. Smaller services organizations could use the cash basis. Anthony, you're the car guy. I told you a little bit about my brother-in-law, my sister's husband. He's the car guy back east.
Yes.
His family for years and years had like 3 auto shops. They had a pizza place. You know, they had like 6 stores. They were well known in town. Even though my brother-in-law is broke right now and he's a bum living in my house, but that's a different story. What I'm getting at there, I would tease him all the time. I go, Artie, how much do you, I said, I don't want to be too nosy, but how much money do you make at that place? He says, well, I don't draw a salary. I said, oh, you take a drawing out? He said, yeah, at the end of the week, we just empty the cash registers and split it up. The business was under that kind of easy control. A business like that, you can get away with it. But they never had to borrow money, apparently. They never had to worry about getting customers.
Wow.
Cash basis, we're done. So I'm going to cut us off right here at the accrual. Any questions, Anthony? Anything you want to talk about here? Or?
Honestly, no. I'm ready for chapter 6 for tonight.
Okay. If you can't find the chart of accounts in chapter 5. Could you text me or email me?
Hey, what's your number, Bob?
Yeah, 80, yeah, you should have the number on the screen, but that's okay. 805-452-4483. Somewhere in that Cengage book. Hold on, I happen to have the book here. Hold on one second. Give me a moment here, class. Boy, am I comfortable. I was leaning back in my wonderful lazy boy here. And I am a lazy boy, that's for sure. Hold on. Okay, I have the book here, Anthony. Oh, here it is. You have the book? It's back in the, here it is right here. You see it? It's the back cover of your book, the back of the spine. You have the book online, Anthony? Or the hardcover?
I didn't know it was on mute. I have both online and hardcover. Hardcover is just not with me right now.
Okay, well, you see where it is then.
Index of accounting.
Well, so it's the back cover.
Okay.
That's the last page right there.
Okay. Beautiful.
There you go. So that's what they were looking for in the chart of accounts. Not the chart of accounts, but in the trial balance. Okay.
So for the reference.
Yep. Yep.
Okay.
So we'll fix that. What was I gonna say? How'd it go with the bidding just now? Did you get the car you wanted?
I got the car I wanted.
And what is it?
Another Prius.
Really? And now what do you do with the Prius? Are you gonna fix it up at all, or?
Honestly, Bob, unless it needs something, no, I'll have it detailed and she'll be ready to go. I usually buy them like that. I will say that the other two I bought yesterday,
Yeah.
one needs a wheel, a detail on the inside, the headlights done. Trying to think what else that one needs.
Nothing major though, it sounds like, huh?
No. I don't buy them where they need major. And then the other one I bought without a catalytic converter, and I'll remove whatever they damage and replace the cat with a new.
Oh yeah, I thought I was worried you were going to say you're going to get away without a catalytic converter, but you can't.
Oh no. Now, especially on that vehicle, you can't. Yeah. I don't mosey around when it comes to my cars.
Yeah,
race car or like a modified fun car like a Corvette or a Mustang, honestly, a little bit more fun, and it benefits.
I was gonna say my brother-in-law, again, back east, he races funny cars. Have you ever heard of a funny car?
Yeah, I grew up with not with them. I grew up seeing them.
Tell me what you think a funny car is.
What a rush. Loud, obnoxious, ruthless horsepower. You have every element of the smell, the feel, the noise. Everything you want from racing. If there's certain levels of car guys. There's like the guys who hit the canyons, the guys who do track days, and then the guys who just go balls out.
Okay, you are kind of describing it. I've only seen it a couple of times. Like I said, we have. In fact, you know what I might do next Tuesday, assuming you'll be here. Maybe I'll have him join us for a few minutes. You guys can chat a little bit.
I'd appreciate that. Yeah.
Let me ask you one other car question. Have you ever heard of this? So this, I'm not going to say stupid. To me, it's stupid. But my brother-in-law takes a car and he cuts it in half, and he removes the back seat, and then he puts it back together. Have you ever heard of that?
Yeah, it's called chopping. That's what they call it. That is above me, and oh my goodness, that is a crap load of work.
I would think so, but yeah, he was showing me. He has a friend there with not a big garage, but he's got his own garage at home, and they have plenty of room to work. And once in a while, I'll go over there. And what are you working on, Art? And all of a sudden, I see a car. Looks like they're cutting a lady in half in a.
Yeah.
I said, "What happened to this car?" He said, "Oh well, we just finished the chopping section. Now we're gonna remove the back seats and we're going to move the engine over here and then we're going to put it back together again. And I'm saying, well, why are you doing this? And he said, and the answer is usually like, why not? Which is what we like to do, you know?
Yeah, they call it a 4-door board out to a 2-door.
Yeah. Yeah.
And
That's
because
right. Yes.
the two
Yes.
doors the 2 doors get more money, and honestly, the 4 doors look disgusting.
Interesting. Interesting. I mean, I don't think he's doing this with new cars. I might be wrong on that,
No,
but
no, but it's gonna probably be 74 on down.
yeah. One last car question. Are you familiar with the Corvair and all the problems that had when it came out?
Yeah, remember, change your water pump.
What's that?
Remember, on those, you always got to change your water pump.
Oh, really? Otherwise they'd overheat on you real quick, or?
It's my smart assness applying to that car is air cooled like a Volkswagen.
Yeah. Yeah. Do you remember the problems with it though? How dangerous that car was?
Death trap.
Absolutely right. Okay, so you know what I'm talking about. Yeah, yeah.
Actually, I had one. I bought one from someone's backyard for a few $100,
Yeah.
and it ended up having a. I didn't know this at the time, but it was like a professionally tuned boxer motor in the back.
Wow.
And yeah, you never know, right?
Yeah, yeah. I mean, it could become popular, you know, again.
It's they're slowly catching on. All the old stuff that people didn't want is
Yeah,
starting to get a little bit of traction. The
yeah,
cars
yeah.
that I grew up in the 80s and the early 90s are starting to become really valuable now.
My cars are relics at my age, huh?
Are you kidding me? Those things are worth gold.
Yeah, yeah.
A lot of
Do you
them. A
remember?
lot.
You remember the Corvair? It had the push button
Transmission.
transmission. Do you remember that?
Yeah. Yes, I do.
Hydromatic, they called it.
And look at today's technology, Bob.
Yeah,
Now everything's push button, but back in the 50s and 60s, they were so ahead of their time that they actually had to pull back.
really. What do you mean
And
pull back?
honestly, okay, so your brother-in-law is around cars all the time. He'll tell you that there's so much technology that's here now. Don't get me wrong, it's refined, but the basis of the technology was way before
Yeah,
its time. Way before.
yeah. I understand. Yeah, interesting stuff. The Corvair, yeah, and it was a popular car. I can remember seeing them all over the neighborhood.
Oh yeah.
It was the perfect second car
Absolutely. And that
for
was the
family.
thing back then, having a second car was mandatory.
Yeah, well, what happened was when I was growing up, the moms didn't work for the most part, but they needed something to get around during the day, and so you saw a lot of Corvairs, and then of course you had all those accidents and dismal tragedies from that thing, and and of course you probably know. Interrupt me if you know this. Chevy tried to hide what was going on,
Oh yeah.
and at one time, Ralph Nader, who I hate for other reasons, but I loved him when he was a car critic. Um, Ralph Nader was able to find letters written by the management of Chevy, where they analyzed the risks of fixing the car or paying off dead people's families' lawsuits, and they said we're not going to fix the car. The projection is we're going to pay less for dead people. Oh, terrible, terrible. I digress. All right. Well, good to have you here, Anthony. And
It happens a lot more now than before.
what's that?
I see companies pull stuff like this all the time. So at certain auctions, so I buy from CarMax and I buy from like Manheim and Odessa, etc.
Yeah.
Manheim gets all the trade-ins or the buybacks or lease returns from very large companies, right? Like GM, Nissan, etc. So I will see bunches of cars come in with the same problem that they bought back from the consumer.
Really?
And that makes me honestly question. I mean, don't get me wrong.
Yeah.
If business stuff happens, I get it. But
Yeah.
there's also things that make you question. For example, the Ford C-Max, which is a hybrid little hatchback, right?
Yeah.
They're notorious for having a flywheel that actually ends up coming off its bolts.
That's why they call it a flywheel.
Right? It flies away. And so that actually ends up damaging the transmission. And Ford said, oh, no, it's not us. It's not us. Well, come to find out many years later, they knew about the defect in the pattern of when it was molded, and they
Yep.
continued to move forward with the sale of the vehicle for years.
Yeah,
And
the
that's why,
buck never stops with the auto manufacturer.
no, it's honestly, I'm not, and it's not just Ford. It is honestly every company out there.
Yeah, yeah.
There's one thing that is wrong with a certain vehicle, and they, sweep it under the rug.
Yeah, it's been happening for a long, long time. The Corvair is just such that's the paradigm though, the big one, the Corvair
That
one.
and Ford Pinto.
Oh, the Pinto, jeez. Again, I don't know much about cars, but that was Detroit's answer. You know this, Detroit's answer to the oil embargo of the early 70s, when gas was selling for 35 cents a gallon. And all of a sudden it went up to like $2. And Americans started to drive Volkswagens and Toyotas, and General Motors and Ford and everybody said, we have to have a competitor. And all they did was take their old car and kind of, like we were just talking about, chopping it down a little bit. And the Pinto and the Colt, you remember the Dodge Colt? That was hideous.
Oh wow, that thing was disgusting. Yeah, I do remember the Dodge Colt.
Yeah, and what was the Ford one? Ford was the Pinto. Chevy had the Vega.
The Chevy Vega, and then the AMC Gremlin.
Pacer.
Oh, Pacer too. There was the
Yeah.
Gremlin too, correct?
The Gremlin, yes. The Pacer was not in that field there, but those cars were terrible in every way a car could be awful. It didn't really give you that much better mileage. There was no pep. They were always breaking down. It was like the Yugo, and those bad cars are what really helped Japan make the inroads here.
Yeah.
I like reading about these different histories of different things, and that's kind of an interesting subject to me.
I study cars for the sake of having as much knowledge as I have. So when I see something roll through the auction,
yeah,
I won't be afraid to bid on it, and I don't lose on making money, because I remember when I first started, I see cars go through, and you can see the expression on their face, like they killed it, and they're going to make money.
Yeah.
And I have some knowledge at the time, and I'm like, no, I need to know more. And here I am with Priuses and stuff.
Nah, you're doing good work. All right, pal. We'll call it a day here, okay?
All right, sir. I'll see you Thursday.
Next week. Oh, Thursday. Yeah, I'm gonna get a hold of my buddy, my brother-in-law Artie, and hook him up with you for like 5 minutes. You know what? Real quick, some silly thing. When I tutor on Thursday, I have my grand niece join us. She's 6 years old, and she joins us for the first 20 minutes, and it's proved to be kind of a funny little thing, So I'll do the same thing with Artie. I'll bring him in our class, okay?
Sounds good.
All right, see you next week. I'll see you in 2 days.
You got it, sir.
Hey, bye-bye.
Bye.
Now, how do I turn this off? This is all.
I was seeing the same thing.
There we go.